Lovely. Thank you, Tracy. Actually really good to see how many of you are kind of new clerks into the role, because this session really is intended for those who might be new and equally maybe haven't got much confidence in that side of sort of finance and accounts as part of the role. We obviously know that being a clerk requires you to wear so many hats, and actually often the numbers bit might be something that actually you're not really that keen on. So it's good if we can just do a bit of an intro into that. So a couple of things just to mention. As Tracy said, the intention is this is an introduction to local council accounting, and mainly because there are so many sort of specific elements of the finances and the accounts that don't necessarily relate to other parts. If you come from a business background and you think you know accounts and finance, actually a lot of that isn't then relevant when you get into this scenario. So it's good just to go through that process as well. Also just to mention that if you're a Scribe customer, you're very, very welcome, but it is not Scribe specific today. There is no specific Scribe training in this session. It's open to everybody. And the slides and the information will be provided to you all at the end as well. So I'm going to share my screen and we can get started. And if you do have any questions, feel free to keep them for the end of the session, and you can just pop them in the chat, or at the end, Tracy's going to ask if anyone's got any questions. You're very welcome to ask away once we get to that point. Okay, so stepping into local government finance, accounting basics for clerks and RFOs. So as we said, really an introductory level into the finance element of the role to understand some of the key concepts to be mindful of when we're going through the financial year itself. So introduction, as we said, and I thought it was useful as a starting point to go right back to the beginning and just actually define what we're talking about in terms of a parish or town council. So an elected body at the first level of local government makes decisions on behalf of the parish and has a wide range of powers relating to local matters. So that was just my definition of that. And we've been doing this session for a few years, and this is sort of where we start with this. So really then to think about the considerations as a basis of that, what that actually means to us in terms of the accounts and the numbers. So firstly, transparency. So we want to be transparent with what the council's doing with its funds, how it's spending that money. Obviously, most of the time, the majority of your funding is coming from the precept, so it's coming from people paying their council tax. So it's important to be transparent about what's going on with that. Obviously, we've got the transparency code as well, so it's important to be able to demonstrate and show how that money is being spent. Part of that then is the efficient provision of services, actually making sure that the money that we're receiving is being spent in the most appropriate way, the services that we're providing, the contractors, the way we tender, the processes, etc. And again, that's going to be governed by your financial regs, your standing orders, making sure those things are happening appropriately so that we're spending money in the right way. And that in turn is then related to the setting of the precept. So depending on, a lot of you obviously said you were new, so it might be that you haven't yet gone through this process. That generally happens in the autumn, and we'll start talking about that in sort of October time. But again, that's a really, really important element of the financial role and the financial year for a council, because obviously setting the precept is key. You need to make sure that you've got enough funds coming in to allow you to provide those services, do the things that you want to do as a council, but that needs to be offset against not taking too much, because obviously with public funds, and particularly at the moment with sort of cost of living we've gone through, we're all feeling the squeeze a little bit, making sure that we're using the council tax, the precept, most appropriately, and actually setting it in an appropriate manner so that we're not ending up with reserves that are sitting too high. And we'll talk about reserves actually at the end of the session as well, as part of all of this process. And as I mentioned there, management of reserves. So we need to make sure we've got enough reserves to cover unexpected situations, cash flow issues, things like that. And if we want to, looking at projects and things we want to do for the local area, for the parish, that we can manage that appropriately. But as I said, we're not holding too much. We're making sure that we're managing it effectively. And then thinking about in terms of the role of the RFO, you may be in a scenario where you have a clerk and a separate RFO, but most of the time and a lot of the time, the clerk will also hold the role of the RFO. And equally, you may hold that role and also doing it part-time. So we know what it's like to have that squeeze of the part-time role, the hours, how many things you need to be doing, and actually managing this process as well, and how important the finances are. So every local authority is required to appoint an officer to be responsible for the administration of their council's financial affairs. So the responsible financial officer, the RFO, and they should be an employee of the council. So thinking more specifically about some of their responsibilities. So following proper financial procedures. So things like tendering for contracts and the way things are done. We just talked about all those sorts of things. Having the internal control and audit systems in place. And if I would imagine the majority of you have been in position to be doing the year end that we've just sort of gone through, you may still be doing it now, sort of understanding how that then relates into the internal audit report coming in. So the internal auditor coming to review how things are going, filling in the annual governance statement, the yes/no assertions to those questions, and being able to answer them, hopefully with yes, because those things are happening. Obviously, reporting to the council on spending and the current position. So your council meetings, being able to take useful financial information along so that they can see what's happening against the budget. You can flag any potential issues, underspends, overspends. You can demonstrate that you're maintaining good financial records because you've got a bank reconciliation that reconciles to your cash book, and you're reporting, and you're assisting with management of reserves. Once we think about the budget setting, we're providing useful financial information in order to work on that as well. So obviously it's really important to have good, timely, useful financial information. So all of these things are relevant. And at the bottom, obviously the AGAR that you may have just got through, as I said, or still be in the thick of it. And you'll see, obviously, that's quite a considerable amount of work around that as well, to collate all that year-end information along with the other parts of it to get together to go to the external auditor, unless, of course, you are exempt. So quite a lot around that as well. And we do sessions earlier in the year all about the year end. And again, we're seeing a trend actually of having lots of new clerks coming in, which is great in many ways, but obviously it means there's quite a lot of training needs there of people coming into a role that actually has so many elements to it, and really understanding what's required. So now that we've kind of talked about why our financial information is so important, we can think about how best to keep it. So we know why we need it. We obviously have some responsibilities as a local council to use funds appropriately, to report it appropriately, and then as you as the clerk or the RFO to provide that information to the council so decisions can be made in the best way. Before we go any further, I think it's just important to confirm, define the two different accounting approaches. And again, if you've just done the AGAR and the accounting statements, hopefully you'll be au fait on this. But just to clarify, because this is something that often catches people out when we ask the question, sometimes you're not sure, you will either be working in receipts and payments or income and expenditure in terms of your accounts. So receipts and payments, simple form of accounts in the recorded at the time at which those transactions took place. So very simply, it's what happened, when it happened, regardless of when it relates to. So it's just a record of the ins and outs related to what's actually gone through in terms of the bank position. It doesn't matter when that invoice actually related to, you're just recording what actually happened. So it might be known as cash accounting as well, and sort of very simplistic generally, but actually often suits a small account. So if they have quite a considered service provision that doesn't actually fluctuate very much. And then we have income and expenditure. So that actually considers the period to which the transactions relate rather than simply when they occurred. So this is more in line with accrual accounting. And if you do have a stronger business finance background, something that you may be more used to, actually adjusting your accounts to take account of what's actually happening and when they relate to. So it's important just to be mindful of that, because obviously that will have an impact on how you keep your cash book and particularly how you go through the year-end process. So hopefully you, as I said, if you've done the year-end, you will know how you're working. But if you do have any uncertainty, if you look at your accounting statements and the boxes that you're filling in on that page, if box 7 and box 8 are the same, then you're almost certainly in receipts and payments. If they're different, you're definitely in income and expenditure. Okay, so do bear that in mind when we're thinking about some of this further information. And just to confirm as well, that if you are under 200,000, you can work in receipts and payments. So that's 200,000 gross income, gross expenditure, and it's for 3 consecutive years. So you may be in a scenario where you are under that threshold and you go over. But if you are not over for 3 consecutive years, you do not need to move to I&E. So you could have large seal money come in, large grant that tips you over that edge, but if it doesn't maintain at that level, you can stay in receipts and payments. If you're over 200k and up to 6.5 million, which I imagine none of you are at that level yet, then it's income and expenditure accounting. Having said all that, you can be smaller and opt to use income and expenditure if you wish, and we tend to see that when a counsellor or a clerk or RFO has a very strong financial background and they feel more comfortable working in an income and expenditure approach. But you don't have to, but it's just to be clear, particularly if you've come in as a new clerk to the council at this point, just to be clear exactly what you need to do. And again, if you are moving between approaches, you will need to remember that you will need to restate the previous financial year. So when we're thinking back to our end of year, our accounting statements, we have our current year, we have our prior year, and both years must use the same approach. So if you do find yourself needing to move between them, you will therefore need to restate. So that's something to consider, but hopefully not until next year's time if you've just gone through that process now. Okay, so as we said then, we've thought about why that financial information is so important, and we've considered how we need to keep that information, particularly with regards to completing the end of year, the AGAR. And then thinking about good procedures now to keep on top of your accounts. So again, basically probably a little bit simplistic, but really it's all about the cash book, and the cash book is the most important accounting record for local councils. So this is basically where you're going to come and enter in the information, the ins and outs, the transactions, the payments, the receipts that are going through the council accounts. So when you're doing that, it's a good idea to obviously do it regularly. And again, that may sound simple, but for those of you, particularly those part-time or obviously got a lot going on, it can be hard to maintain all aspects of the role. But obviously, if you get really behind, it just makes life that much harder. So try and put some time aside where you'll have clearly defined time for the accounts and you're regularly recording those payments and receipts. Make sure you're splitting out the VAT element. And as Tracy mentioned, we'll talk about VAT in a moment or two, because that's everyone's favourite topic. Make sure you've got that full audit trail. So you've got the copy of that invoice, you've logged it, you've got all the information so that you can track it back and it can be checked and you can see exactly where that all relates to. Regular bank reconciliations to help you confirm that the data is correct, it's up to date, it's been entered into the cash book correctly. We recommend monthly bank recs, because if then you do find an error, you've only got a month worth of transactions to look back through. If you don't do it for 6 months and something's gone wrong, that's a lot of data to review. And obviously, if you're going to regular meetings, you'd want to be up to date with that information to be able to provide it. And all the time when you've got that cash book and you're filling in that information, it's important just to ask yourself and think about, can I produce timely and useful information easily? Has it got all the information that I want in my cash book? And if somebody came to me, a councillor came to me and said, how much is it costing us to run the village hall? How much income do we get? Can you report on that easily? Can you provide that information? So thinking about what information do I want to keep in the cash book? What's useful to have? Particularly now that we're just through the year-end process, hopefully most of you are, if you've really struggled with collating that information, if it took a long time, for example, to collate your box 4 staff cost figure, can you think about how you could improve that cash book so actually you've got that information to more easily put it together, report on the information that you want. So some further questions there at the bottom. Is your accounting system fit for purpose? So does it do what you want it to do? And that's not only in terms of actually adding in the transactions and the numbers parts and the reports, but also thinking about where can I access it? You know, if it's just on an old PC in the office that I need to go and see, is that practical for me? Can I share the information? Can other councillors, my internal auditor, can they access it? Do they have read-only access to come and see what's going on? Does it take regular backups? You know, if the PC blew up, would I have lost everything? So it's thinking about those things as well, not just about the actual data that we're putting in. Do you need training on it? You know, have you come into a situation where, and this is something again that we hear really regularly, that you come into the role, you get handed a box, or somebody even told me they got a carrier bag of documents. Here we go, there's your handover, and off they went, and they had to work out what was going on exactly with it all. So often you come into the role, you don't get training, and you've got to work back and try and work out what's gone on previously. And that can be really, really hard. Picking up from where somebody left off is incredibly difficult. And does it suit the needs of your council? Does it do all the things that you want it to do? And this is, you know, both in access, backups, etc., but also giving you information that you want as well. Does it provide timely, useful information that they can then make informed decisions based upon? So just a little extract from Scribe there, just to show you a bank rec, and hopefully you're doing something similar to this on a regular basis, so that you've got that record, that the information that you have recorded in the cash book matches to the bank statements, because then that gives you confirmation that the information that you're entering is based on fact and matches up. So in terms of thinking about the cash book then, and all the things we've said about it, so in terms of structuring it, I would base it on your council budget or your preset breakdown. And again, that probably sounds reasonably simple, straightforward, but actually very, very often we'll have councils who'll come and join us at Scribe, and they'll have a very nice budget sheet. It'll be listed out with all their budget codes and their budget amounts against it. And then they'll have a cash book, possibly on a spreadsheet, that actually bears no resemblance to that budget. So if somebody said, how much have we spent against this line, you know, budget line of maintenance, for example, there isn't actually a column in the spreadsheet for maintenance. So actually trying to work that out is incredibly hard. So it's important to think about, actually, let's have it based on our budget, allocate our transactions out to those budget codes, so we can very easily produce information that gives us details about the spend against our budget. Group codes together that require reporting on. So I mentioned the village hall. So obviously, if it's useful to be able to see exactly what's happening in your different areas, it's what we call cost centres at Scribe, then it's useful to do so, because you can then very easily produce reports to say, and this is what's happening at the village hall, this is the income we've had versus what it cost us to run it, so we can see exactly what's going on. So as I said, now is a good time to think about whether you can improve it. Obviously, we're only a couple of months or so into the new financial year, so we've still got time to sort of think about how might we want to improve it, to change it. You know, do we need more codes to analyze the data further? You know, often we see someone just comes in and has a code for admin, but that encompasses everything from phones, printer, salaries, whatever it may be, office rent, all those things. That actually would be really useful to break that down. And making sure you've got enough information in the cash book as well. So are you recording VAT numbers? Really important if you're thinking about reclaiming VAT. Have you got invoice numbers in there as well? So if supplier phones up and says, have you paid this invoice? You can easily check without having to look back at your paper copies. So always thinking about, how can I improve it? How can I add more information to make it useful for me? And there's just a little extract again from Scribe, just to show you just reports of budget versus actual, so we can see what goes on against the codes, to just being able to report in that way to be able to see exactly what's going on. So just a brief summary on the cash book then. So setting aside time regularly to keep the cash book up to date, and making sure you've got all that information that's actually useful for you as well in there, and regular bank recs, ideally monthly, because that limits the scope for errors. And just as a sort of continuation of what we talked about of being often a single person role, there's a couple of links there as well if you do want to link up, and just, even if you just want to go on their event and to have a really hard day, does anyone feel this as well, it's nice to have that option. And there's actually some links on the last slide once we get through this process with some helpful stuff as well, things we've talked about. So here we are then at VAT. So we can't do a session like this without talking about VAT, because again, VAT is obviously important in here. It's often scary to people, and it's the way it works for local councils is very, very specific and different to business scenarios. So it's important to have an understanding of that. So really, I'm going to just scratch the surface with regards to VAT, because there's quite a lot of information around it. A couple of things therefore to say: if you think you've got a sort of complicated VAT position, I'd always suggest you take specialist VAT advice. and you'll be able to get information about who best to talk to from your local ALC. And I don't know, there's something I was going to say there, but that's just really important, I think, just to consider that and how different it is. And there's a useful link at the end as well to VAT 749, which is an HMRC help guide, which is reasonably long, but reasonably useful with regards to information about VAT. So starting off then, thinking about us being a non-VAT registered council. So that means we've not got a VAT number, we're not registered for VAT, we're not making any taxable supplies. So we're likely just in a scenario where a majority of our income comes from the preset, we may get some other bits and bobs in, but actually nothing warrants us to be VAT registered. So in that scenario, we can claim back VAT. Okay, and there are some limitations there around business activities that as I said, I'm not going to get into too much detail there, but in the main, we can claim back VAT using Form 126 on the HMRC website. So again, hopefully you've come across that before, but if not, do have a look at that and make sure, see if you've got a Government Gateway ID in order to log on to do that, so that you can log on and submit your claim to them. You can do it via post, but likely you'll have a Government Gateway ID in which to do it. So there are no specific timing for claims. So it's not like if you're VAT registered, you'll need to do VAT returns, and there'll be very specific timings for those returns and when you need to have submitted them by. If you're just claiming it back, it's sort of reasonably enough, you can do sort of as you wish to. If it's less than £100, it must be for a complete calendar year, and it must be for a complete calendar month. So don't just decide that today you're going to do a VAT claim as that today you want to go to complete months worth. And if possible, I would suggest you try and get into a routine. So if you're smaller, you might want to do it just annually to the 31st of March, because that works well to tie it in as part of the year end. It might seem that that's making more work for you, but actually if you can get to a position where you can then check all your VAT's been accounted for correctly and you're doing everything as part of the year end process, it tends to work well. So at least annually to the 31st of March, or you may want to go 6 monthly, quarterly, but it works well if you can get into a routine, because it helps then with working out when you last did it, when you need to go to, and if somebody comes into the role, it's easy for them to pick up when it last was done so they can carry on that process. So claims can be made going back 4 years. So if you have come in as a new clerk into the role and it doesn't look like any VAT has been reclaimed for a while, it's something worth looking into. Obviously, you've got to offset how much work there is to go and collate that information, particularly if you have a cash book that maybe is missing some information. It's not that good to sort of work through the data versus how much you can get back. But do have a look at that, because obviously there may be, you know, a certain amount of VAT that's been unclaimed that you can go back and do so. So as I said there, yeah, at least annually, ideally to the 31st of March, and always make sure you keep that record, that copy of what you're submitting, so you can see exactly what's gone on and you've got those VAT records going forward. Just a little extract there again from Scribe. So Scribe collects all that information for you, so you can run it when you want to, and it will pull through that information. So this is all the sort of information that you need to provide when you do that Form 126 claim. So making sure, as I said, you've got the VAT number, you're putting in invoice details, invoice date. So when you're entering data into the cash book, just as much as if you've got an invoice number and date and the VAT number, obviously make sure you've got that information in there. It's going to save you time later than having to go back and look up the paper copies. Okay, so then we can think about being VAT registered. So that's because you'll have additional sources of income besides your preset that warrants you to be registered for VAT, such as running a car park. So again, the rules around in becoming VAT registered are different. So if you're in a business scenario, when you hit the VAT threshold, which I think is now 90k, you need to become VAT registered. That is not true for a council. Actually, what the expectation is, as soon as you start making taxable supplies, you should become VAT registered. However, in practice, HMRC don't enforce it until you'd reached £1,000 of output tax. So you then need to start having a reasonably regular source of taxable income coming in that would warrant you to be VAT registered. So if you are going down that sort of route, thinking that might be an issue, a problem that becomes VAT registered, again, as I said, think about that specialist VAT advice. But if you are VAT registered, you will need to submit VAT returns, normally quarterly. Sometimes we see it monthly basis. And as I said, Obviously, you'll have a very specific return date period, and you'll have a time by which you need to submit that return, and you must do it using Making Tax Digital, so via software. So that came in maybe 3 or so years ago, I think it must have been. Initially, it was optional for councils, but now mandatory. So you will, if you're VAT registered, you will need some way of submitting them directly to HMRC from your software. And the intention, therefore, is it increases accuracy, and it's got a log of all that information if it's needed to go back to interrogate what was actually submitted through to them as well. So generally then, thinking about recording VAT, as we said, make sure it's recorded separately in the cash book, because obviously you need to know the element of that. So not only in terms of actually the reclaiming of the VAT, but thinking about when we talk about budget versus actuals, your actual should always be the net amounts, because that's the true cost to the council if the VAT's reclaimed. So you need to split it out in order that you can then report your budget versus actuals appropriately. Remember as well that you must have an invoice showing the VAT number. You must have the percentage or the amount of VAT being charged as well. You must have that paperwork. There are some other sort of rules and regulations around reclaiming of VAT to make sure that you're just not buying it on behalf of somebody and then passing it along. So do take a look at VAT 749, because it's got a lot more information about how that all works. And as I said, the link is on the last slide as well. And if it's a long or onerous process, think about how you can improve your cash book. You know, have I not got the VAT number in there? Am I not splitting out correctly? How can I improve it going forward for making my VAT claims a bit easier, a bit more time saving? So then we can move on to some other important financial information I think it's worth just mentioning as well. So firstly is the asset register. So again, this is likely something that you've just been reviewing, dealing with if you've done the end of year, because your total value will need to go into box 9 for your asset register. So again, this is your record of the council's tangible assets. As we said then, it's the supporting information for box 9 on the accounting statements, but it's also useful to have that record of assets for insurance purposes, and also thinking about budgeting as well. So we need to be able to have insurance for covering those assets that you've got, but we also need to be thinking ahead as well about replacements of assets. So what is the life of our asset? What is the timeline for needing to replace them? How does that fit in with our budgeting, our precept setting? How are we managing that? Do we have reserves for asset replacement, which I'd strongly recommend that you do, and we'll talk about reserves in a moment. But just thinking about how we can manage those assets. The last thing we want is suddenly deciding and realizing that we have a lot of assets that all need replacing at once. We haven't got anything in reserves for that, and suddenly what does that mean for your budget setting, your precept setting? You want to be able to manage that appropriately, so you need to know what is happening with your assets. So obviously asset register can then help with that. So the management of your assets, the location, you know, where are they? So if somebody needs to go and check them, you can easily locate them. Maintenance levels of them, so what's the requirement for that? As we said, the renewals as well. So thinking about the cost of having that asset is not just buying an asset, is actually how much does it cost to run it, to maintain it, what life does it have, how we manage it, thinking about replacing it, what will happen to it. And there are specific rules for councils as well, so no depreciation. So if you come again from a financial background where you're used to asset depreciating, it doesn't. It goes on to the asset register in its original purchase value, and it remains there until it is disposed or sold. So the key information that you'll be putting into your asset register: date of acquisition, when did you acquire it, when did you purchase it, how much did it cost to do that, and it's £1 for gifted or community assets, which often happens if you've come in and something's been inherited by the parish council, or there was a building that's long time ago has suddenly become under the parish council remit. Not always the most, therefore, sort of most accurate purchase value of assets, particularly if you have a lot of those sorts of assets that have got that proxy pound value. And then the location and the useful life, as we've talked about. Obviously important to keep it updated for additions and disposals. And again, more is more. So the more information you can put into the asset register about your assets, the more useful it will be. And another thing to mention, actually, something we often see, is that somebody buys, let's say, 5 benches. It will go onto the asset register as a record of 5 benches. But actually, if you can split them out individually, it allows you to manage them more easily. You know, where is each of those? If you need to dispose of one or replace one before the others, it's easier to manage. So making sure that you've got them all split out so that you can more easily manage them. And then finally, then just to talk about reserves as well, because that's a really, really important element of council accounts as well, making sure that you have appropriate reserves. So as it says there, essential that councils have adequate reserves to cover both their day-to-day financial obligations as well as future projects. So we've seen obviously larger councils over the sort of past few months, sort of reports of that and news about them going, problems, not having enough money to run. So that is really the key here, making sure that you've got appropriate level of reserves to allow a council to run effectively, particularly if something happened unexpectedly or there was any issues, that you've got that level that you need. So reserves should be reviewed and justified at least annually. So that goes back to what we said about at the start, making sure we have good financial information so that they can be reviewed, so that you know how much is in them, how we're managing them, what's potentially going to happen, and how that fits in to the budget setting, to the precept element, and managing those reserves. So we've got general reserves, how to cover unexpected events, cash flow problems. Should be equivalent between 3 and 12 months net revenue expenditure as well, to make sure that you've got enough to cover those unforeseen potential problems. So if you are a smaller council, you'll have closer to 12 months expenditure, because something you might not have that, might not be equivalent to that much money to have an impact. If you're larger, it's more likely to be close to the 3-month level. And actually, you may be aware, hopefully, of the JPAG Practitioner's Guide, which is sort of the Bible to completing the AGAR. That's being replaced by SAP, which is the Smaller Authorities Proper Practices Panel, I believe, which is a bit of a tongue twister. But they've got a new Practitioner's Guide out now, which is for this new financial year. And actually, one of the changes is that if you don't have 3 to 12 months, if you have less or more, you will need to explain it as part of the year-end process. So if you are not maintaining enough of a reserve, why is that, what's happened? Or if you've got too much, again, why is that, what are you doing with it? So it's really important to make sure that you've got an appropriate level. If you haven't got enough, potentially you're going to have real problems. If you've got too much, have you asked for too much precept? How are you going to manage that, mitigate that going forward? You can, of course, though, have other reserves as well. So you can have earmarked reserves held for specific purposes or projects. So if you want to do some improvements, some nice things in the parish, install a play park, do something like that, then you'll have an earmarked reserve. Likely you'll be saving up for that. You may have some grants, or you may put some money aside from the precept allocation to put into that reserve to save for that project. And that's really a useful way to manage that, making sure that you've got enough money, obviously, in there. You're costed it out so you know how much you need. But it's also really useful as well to have it for things like election costs or anything that don't happen on a regular annual basis, so that you've got money in the pot that you can put into to allow you to flatline the budget, so you don't have these peaks and troughs that I mentioned with regards to having to replace assets all at once. If you suddenly have an election cost and you haven't got anything held for that, you're going to have these peaks and troughs with your budget setting. That's something we talk a lot more about when we do the budget, same sort of session, all about budgeting and forecasting come the autumn. So do look out for that if you want to come along to that, but thinking about how we can manage those reserves appropriately. And then capital reserves, so capital purposes, fixed asset items, repayment of loans, and you must keep a capital reserve if you've disposed of an asset that was over 10k. That disposal proceeds go into a capital reserve. It's also worth mentioning there is no upper limit for earmarked and capital reserve. So the general reserve should be within that 3 to 12 months figure, but your earmarked or capital reserves are not restricted by that. So obviously, if you're saving up to build a community centre, you're likely to have a very, very large reserve held for that. That's fine, as long as you can explain that, give the information how it all works, the plan, the schedule, all of those things are really important to maintain. So it's just understanding that you should not be in a scenario where you've got great surplus of money that hasn't got a plan for it, because obviously that would not be appropriate to be holding that with no real plan about how that's going to be spent. Okay, lots and lots of information there. And as I mentioned, useful, just to finish off with the helpful resources, that links in there that if you haven't seen, I definitely suggest you have a look at. So the Practitioner's Guide, as I mentioned, the top one is the new one for this year. The second one is the one relevant to 24-25 if you're still working on that financial year. The Internal Auditor gives good advice on good practices and compliance. You can ask questions of them if you need to. The External Auditor, obviously you can directly go and ask them for advice, but actually the website that they have and guidance around the year end is really, really useful, of all the things that they want information, the decision tree about the information that you need to give as well. You've likely seen that already, but again, it's worth mentioning that. VAT 749, which is what I mentioned for all about VAT. So if you haven't read that before, I would suggest you do so. Not particularly exciting, but it is useful. And then obviously you've got SLCC, now local ALC as well. So all sources of lots of help and support if you need it. And finally, Clerks Corner on Facebook, again, a wealth of information and support. And as I said, if you just want to go on there and have an event and say, I've really had a really hard day, you'll find lots of other people who are probably feeling just the same as you as well. Okay, finally, so I've gone through all of that now. Let me finish there and I will hand back over to Tracy. Thank you very much.